Hello. In Chapter 1 of any accounting textbook, the primary objective is to introduce you to the field of accounting or the profession, to introduce you to the legal forms of businesses and types of businesses such as sole proprietorships and service businesses and corporations, of course. In this demonstration here, of course, we are taking a corporate approach, and that will guide how we make our transactions for this company. Another objective, of course, is to introduce you to the accounting equation assets equals liabilities plus stockholders' equity, and know what the components of stockholders' equity are and how we conduct our transactions in order to keep our equation in balance. Now, the last objective then, of course, is to input data into a form or a system that will yield totals at the end so that we can prepare financial statements, and that is the ultimate goal. This problem here demonstrates what we call transactional analysis. So you are given a list of transactions, and you will input those transactions one at a time. And of course, in order to be successful with an accounting system, you must know how it works. So one real big tip here is that you need to read the green lettering here. And note that if a box is not used in the transaction, leave the box empty. That's the transaction line right here. And this is the balance line. And we will keep a running balance. And it's one of the things that's a little bit more tedious about this process. So let's take a look at the first transaction. One objective of looking at a transaction is to know how to evaluate a transaction and determine what accounts are involved. These are all your accounts that you're working with here. What accounts are involved? Are they going up or are they going down? And to input them in such a way that the equation remains in balance. Before you can even evaluate that transaction, or part of the evaluation of the transaction is to determine if this is a business transaction or is it a transaction outside of the realm of the business. Remember, that's called the entity principle, and we want to record only business transactions into our business system, our accounting system. So in this first case here, we received $1,000 cash proceeds from refinancing her house. She refinanced her house, that's a personal asset, and she received $100,000 cash, but this is her business, so she didn't receive anything. So we leave all these blank. This is not a transaction for the business, and we enter the balances. And all of our balances are zero, and this is what we do to keep our system in balance. Now you leave these blank, and then we just enter zeros here, and then we can check our answer, and we did fantastic. Okay, so now the second transaction comes up. It takes a little evaluation here, and it says June 5th, $99,000 of common stock in the business was sold, and the cash proceeds are deposited in the business account. Okay. When an individual starts a corporation, they are the sole stockholder, and that's the case of Miss Gracie here. Okay, so she got $99,000. That means cash is involved, and her cash just went up $99,000. Now we know that when common stock is sold, that's a component of our stockholders' equity. Stockholders' equity is made up of common stock and retained earnings. Retained earnings is made up of revenues, expenses, and dividends. And they each have a different impact on stockholders' equity. So we'll put $99,000 here, and we will balance our transaction and total all of our accounts. So we would add the $99,000 to the zero, of course, and that'll be $99,000. And we've had no revenues or expenses at this point. Miss Gracie is just launching her business, and we did a good job. All right, so now we got a little dough in our business and we want to start spending it. So first thing we do is we buy some office supplies. So we got office supplies involved, and we paid $750 in cash, so we know cash is involved. So our cash goes down by $750. Our supplies go up by $750. And that's all that transaction is. This is what's called an exchange of assets. You exchange one asset for another one. So now we total up. We total up our cash, and we had $99,000. Might be easier to keep this on a calculator than to do it here. And so we've got $98,250 for a balance, no ARs, and our office supplies are now $750. Zero. Our common stock is not going to change. And zero revenues, zero expenses, and zero dividends. We're still getting this business off the ground. Okay, did a good job. All right, purchased $2,900 of office furniture. Yeah, well, we got office supplies. We could have office furniture. But look, there's a little something different here. $2,900 of office furniture for the accounting practice, but we're not going to pay for it right now. So what's involved? Well, we bought some office furniture for $2,900. And we're going to pay for it later. That's an accounts payable. There you go. So we carry down our balances. Got a little bit of furniture, got a little bit of debt now. Common stock is, like I said, not going to change. And we still have zero revenues, expenses, and no dividends. And that makes sense. We're still getting this business off the ground. We're just setting up our offices. Whoops. So I've done something wrong here. So this is the first thing that we do. We got to figure out what it is that I did wrong. 99, well, there we go. It's 98,250. How easy is it to enter errors like that? Okay, it doesn't like this zero in here under dividends. I'm not sure why. Okay, well, it just passed me on. And it says our balance of 98,250 is incorrect. Or what did we put? It says we put 99,250. I guess I didn't save that transaction. So anyway, we go on. It is very easy to make a small error, and it's important for you to know that that cost me just a little bit of points. All right, so she sold some shares of stock. And she got $4,400 cash was deposited in her personal account. Okay, again, her personal account. So no transaction has occurred. We're just going to bring down our balances. And this time I'm going to do it properly. And pretty sure we got that one correct. Good. All right, so the next transaction, remember, June 14th, the representative of a large company telephoned Jacinda and told her that the company's intention is to hire her as their accountant. Well, there's no substance to that. Okay, it's nice that we're going to be hired as an accountant, but that is not a transaction either. We carry down our balances, recognizing that this occurred, but this is not a transaction, so we will not record it. Certainly not in our business account. All right, we'll check our answer, and boy, it should be right. June 20th, we finished accounting work for a client and sent them a bill. Okay, that means we've got a little revenue here. Let's go $3,800 in revenue. We like revenue. And of course, cash didn't go up, so it must be accounts receivable. So we billed $3,800 and we have an accounts receivable. That's an amount owed to us that we haven't yet received in cash. and that'll help us keep track of who owes us money. So now we're going to carry down our balances again. Notice we're conserving our cash. $3,800 in revenue, no expenses yet, and no dividends. Now this is kind of interesting. Most businesses do have expenses before they generate revenues, but in this case it's a service business, and it's possible to go out and perform some service previous to an expense actually being incurred. Let's check our answer. It's looking good. And now, let's see, we paid office rent, paid. Okay, it doesn't say cash, but we did, it does say paid. So our cash goes down $750, and we now have an expense to deal with, and we just put the $750 in there. Notice that little minus sign right there. That is a negative $750, so our equation is in balance, so we can go with that. Now we're going to subtract over here in our cash account $750, and so our cash is now $97,500. We still have some AR that's waiting to come in, or we're waiting for it to come in. Revenues of $3,800 and expenses of $750, and no dividends have been paid at this point. Oh geez, got something wrong again. I'm going to guess that it is going to be in the cash again. So I'm going to clear this out. 98,250 minus, oh yes, 750. Well, if I could just do this right, 98,250. So I think a calculator works a little better than a hand calculator works better than the one that's provided. Minus $750 equals $97,500. Okay, we're definitely doing something wrong here. We paid office rent for $700. How'd I read that as $750? You probably caught that well before I did. All right, so this is 700. And of course, this is going to be 98,250. I like to do it. 97,550. And let's check our work. Oh my goodness. Do I really just keep doing my math wrong? Is that all this is all about? 9250 minus 700 equals 97,550. $3,800. That's 5,750. Okay, I'm just going to check answer again because I just don't know what I'm doing wrong. 97,550. Oh, there we go. I didn't put a minus sign in front of that 700. Details. You've got to pay attention to the details. So, if nothing else, this demonstration is showing you how to do a transactional analysis and how easy it is just to make mistakes. So, be careful and watch that closely. 29th, we paid $2,300 on account. Okay, cash is involved, minus 2,300. Got that right. And we're paying 2,300 on accounts payable. So it's minus 2,300 there. And now we're going to figure out what our cash balance is again. Minus 2,300. 95,250, and AR is 3,800. Supplies is $750. Furniture is $2,900. And we now owe a bit less on our accounts payable by $600. And common stock is still $99,000. Revenue is $3,800. Expenses $700 and $0. Okay. Now on June 30th we paid $500 in dividends. All right. $500 on dividends. Well, that's easy. We always pay dividends out in cash. And we've got a dividend account down here, $500. Again, I entered $500 because there's a minus sign right there. And now we have a new balance in cash. So let's go minus 500. 94,750. And AR 3,800. So we haven't collected that 3,800. And we're off and running. We got 600 in liabilities here. 99,000. Common stock 3,800. In revenue, 700 in expenses, 500 in dividends. And let's check our answer. Good. Okay, so now just to test our knowledge about the accounting equation, what's our total assets? So we got 94,750 in cash plus 3,800 in AR plus 750 in supplies plus 2,900 in furniture, and that's our total assets, 102,200. Total liabilities is 600. Total stockholders' equity. Now, we could just subtract our assets minus our liabilities, couldn't we? But I think what we're going to do is we're going to go ahead and add it up. So we got 99,000 plus the revenue of 3,800 minus 700 in expenses and minus 500 in dividends. And that's equal to 101,600. 101,600. Well, we want to double check that. 102,200 minus 600 equals 101,600. Okay, feel pretty good about that. Now, net income or loss. Well, that's $3,100. That's 3,800 minus 700. Notice I'm not subtracting the 500 from the revenue because that is not a component of expense. And we can check our answer, and we feel really good about that, and we can go on to the next question. So, excellent job. I made plenty of mistakes so you can see how it's done, and I hope you learn from this. Primary reason I did this is because in my class that I'm teaching at Spokane Community College, and using the Pearson text in MyLab, the demo docs have dropped the transactional analysis out. And I think that they should put the transactional analysis back into the demo docs. But this should do. And I hope this helps.